Hi, everybody, and welcome to another market review. I know today isn't Monday, but yesterday was Easter Monday, and quite a few folks weren't able to make our session yesterday. So I'm going to be doing another one for you folks today and posting this as a recording in the group and on YouTube and obviously in our resources section. So, folks, this is obviously week 3 now of our trading challenge. So at the end of this week, we will be halfway through it. But as of now, you've effectively still got almost a month to go, still early days. And I hope that it's going well. Last week certainly was a week which we could classify as quiet. When it comes to core strategies, you should have been able to hold your own, but it was pretty quiet. This is certainly one of those periods where you need to be taking every valid trade, but there aren't nearly as many of them, certainly for core strategies and trending strategies as there were, say, a month ago. But that's okay. It's important that you just keep pacing yourself and not try to look for things that aren't there. That's very often a tendency that aspiring or novice traders have. So beware of that. All right. Let's jump into the charts though and have a look at what's been potting. We've got, as always, starting off with the Euro USD, a range still very much on the weekly time frame, particularly looking at our HDC channel. We aren't using the LPO channels at all at the moment. We're just looking at HDC channels. And on the weekly, as you know, we're using the 4-wave 13 candle channel. So that being said, this is quite a long extended bearish impulse wave, which when dropping down to the daily time frame looks like that. So we've had that breakout, no question about it. We are still outside of the channel on daily, but as you can see, this is a corrective wave and it's coming back up to this resistance level. So interested to see what it does, whether it respects that level or not when it gets there. Also in context of what's happening on the cable, we've got almost two absolutely opposite things happening over the longer term between the euro and the cable, but we'll look at that in a second. So yesterday, Monday, Easter Monday, we had that short bearish candle. Beg your pardon, that was last week. Yesterday, Monday, turned out to be a strong bullish impulse candle. But when we were looking at it yesterday morning, it looked like this potentially was going to isolate that high. It didn't happen. As you can see, this is an absolute continuation with a non-relevant isolated low here and a bullish engulfing candle. So quite interesting to see how this panned out for those of you who were on the call yesterday. In any case, that's also why the conservative approach to our impulse strategies would wait for an isolated high, wait for an absolute end to any corrective wave before looking to trade the following impulse wave. So definitely still technically a corrective wave coming back up to that resistance level. For those of you who are trading the continuation strategies, you would still be looking for an entry to short the market here. And impulse type strategies, you need to wait for the corrective wave to actually be over if you're trading our standard rule set. Okay, so that's the euro. Nothing else to look at over there. Moving on, and this is what it looks like on the cable on the weekly. Certainly, again, we saw this support level being nicely resisted now for 2 weeks in a row. And just as a matter of context, folks, today is Tuesday. So remember, our final weekly candle here still has a long way to go. We tend to, we ignore that candle until it is actually set in stone, which will only be at close on Friday. So if I'm ignoring the final candle here, that's why. So that being said, last week's candle was an inside bar as well. And for impulse strategies, we treat that as if the corrective wave has in fact come to an end. So I know that for impulse strategies, that means that this week we'd be looking to drop down to our execution time frame and identify our final selection criteria there. But generally speaking, as you can see, we are still outside of the channel. and we are potentially back into the next bullish impulse wave here. Now, as I say, that's exactly the opposite picture as to what we saw on the euro. When we discussed it yesterday, we were interested to see which one was going to win, if you like, and it looks like it's the pound. That's one out here. Dropping down to daily, that is what it looks like. We're still inside the channel here, of course, because that long corrective wave on a weekly is this weak bearish trend that we saw here. Now that's really just a flag pattern. It's not really, certainly not a strong trend. But what is interesting is where it found that support on the weekly time frame. We've seen this breakdown in the bearish sequentiality of cyclicity here, with certainly yesterday a bullish impulse candle confirming this as an impulse wave. So quite a bullish picture over here, certainly overall, when you combine the weekly time frame with what we're seeing down here on the daily time frame. So for anybody who's also looking at the dynamic support and resistance levels, you know, the trend line would be somewhere in that region, possibly even more aggressively. So either way, yesterday's candle certainly looks like it's pumped through that resistance level. Let's see what happens next when it comes up to the structure. Remember, we look left, structure leaves clues. So quite this is an interesting picture. Remember, we're combining both the weekly time frame, specifically for our higher time frame selection criteria, which in this case is definitely still very much trending, but we've also seen that support level respected over there, which is quite a strong picture, folks. You'll see quite a lot of this as we go through the other pairs. There are some really strong pictures showing themselves here. Now, remember, that is not about predicting that the market is going to continue going up. This could well end up being a breakdown in cyclicity here as well. We might not have a bullish impulse wave. We're not trying to predict that, but certainly if you were just to look at this last time period here and were to draw in a trend line, then certainly this bearish corrective wave that we've seen over the last 5 or 6 weeks has broken through that dynamic support level of the trend line. However, cyclicity is still intact here, and that's the important thing to note. And as I say, even more importantly, in maintaining that intact cyclicity, we've got the support level being respected. All right, so enough about those two, but it's quite important in the context of what we're going to see across many of the currency pairs. Right, so dollar yen still showing strong bullish tendencies, certainly as at the close of last week with yet another strong bullish impulse candle, a single extended bullish impulse wave here on weekly. This has produced one of our winners last week on daily and certainly also on the H4 time frame. And that was in the run-up, obviously, to non-farm payroll. But it certainly worked out well overall. But you can see how over several of the pairs in the run-up to last week, Friday, we had a bit of pause for thought with non-farm payroll on the horizon. So the market response generally to that seems to have been relatively neutral. There was definitely quite a lot of interest in terms of what the results were going to be. We often see that as the market takes a breather in the few days leading up to non-farm payroll. If it doesn't, it shows you that the market's kind of not really interested, or they're assuming they know what's going to happen. Last week, there was definitely no expectation that the forecasts were going to come out as forecast. It looks like expectations were pretty much met overall. In any case, on this pair, we're still seeing a retracement wave here on daily. So still in that phase 2, however, also still very much trending. So as you know, in conditions like this, if you're a continuation trader, you should be placing trades or orders already. Whereas if you are an impulse trader, you're sitting on your hands and you're waiting. Okay, so pretty straightforward. Nothing to do on the lower time frames certainly in the last couple of days. Right, so dollar Swiss likewise also showing very strong bullish tendencies overall on the weekly time frame. Last week, just managing to give us that impulse candle. Still not as strong a bullish candles on the yen. Nevertheless, this is established bullish cyclicity, so it's an established bullish trend. It's continued to break through preceding resistance levels. So let's see what happens during the course of this week. It's coming back down to test what was a resistance, now support level. So let's see what happens there. And still very early in the week, obviously, but you can see we did have a breakdown in sequentiality of cyclicity. If that is a single candle wave, as the analysis has been done on this. Just want to double check that. Don't want to mislead anybody. 047 38. Actually, it doesn't look like it is. So let me just pull this back slightly. That should be there. Get that out of the way. Otherwise, I know I'm going to be getting those comments correcting me on this, and quite right too. So that's, oh my word. Okay, so that's still that, which means that is that. This is the 3 steps to heaven, guys. It goes to show that if you make a mistake on this, it can make a rather significant difference to the analysis. All right, so although I'm quite happy to leave that there for the moment, obviously I'm not going to waste your time on going backwards on this altogether. The main point to note here, however, is that either way, regardless, we have had a breakdown in bullish cyclicity. Yesterday's candle did in fact close back inside this longer term channel over here. So let's also just bring that down because that actually does belong there. But this does mean that although we had an established trend here with 2 impulse waves outside of the preceding range area, we are now able to treat this as a range. It is no longer trending on the daily time frame. That's okay because remember on the weekly time frame it still is. So we wouldn't be looking to drop down to any lower on the time frames. We're certainly going to keep our eye out for potential resumption of a trend by identifying any reestablishment of bullish cyclicity on this time frame. All right, so that's dollar Swiss. Obviously, some updates here from yesterday as well, folks, where we didn't have any of we didn't have the close of yesterday's candle. All right, so dollar CAD also showing a very strong picture on the weekly time frame. Here we had this bullish retracement in this bearish trend. What's interesting is that yet again, this resistance level has been respected for 2 solid weeks. All right. Remember, we can't say what's going to happen this week. It may well continue and close back inside of the channel, which of course would be a sign of weakness, even though the trend would still be intact. So far, this is showing that it is still strong. We're looking for this high to be isolated during the course of this week for impulse traders to be able to trade this in a bearish direction on the lower time frames. If you're trading continuation strategies, single time frame continuation strategies on the weekly time frame, then you would actually be in a trade on this already. So dropping down to daily, what's interesting here is that yet again we've seen all this. This was quite a long, extended bullish wave. We are seeing relatively strong bearish tendencies over here. However, it's still early days. As you can see, what was a resistance level was solidly broken a few weeks ago, as we know. But let's see what happens before we can do anything else. There's nothing else doing for us on this one. As far as that's concerned, we need to wait and see what happens through the course of this week leading up to the end of the week. Right, on the Aussie, another picture of, on the weekly time frame, solidly ranging market. So although Last week's candle closed below the previous wave's low, giving us a bearish impulse wave. It wasn't even an impulse candle. So that's nothing really for us to identify there. We've had our overlay already. What is interesting on the daily time frame is that we've got a very solid support level that has continued to be respected through the course of last week. And this test through the support level is very strongly bullish. Although we don't have a bullish impulse wave as yet, that is certainly an indication that bearish cyclicity, such as it was not able to establish itself with a failure to break below that preceding wave's low. So remember, even though that is a slightly longer wave, this is very much a corrective or phase 2 wave. The inability of the market to sustain price below that support level is a sign, a significant sign of bearish weakness. Does that mean we're going to have bullish strength? Well, so far, no, not yet. We need to see more consistent breaking of resistance levels before we can say that. But even so, we are deep inside of the range on weekly. So much as this support level there is being respected, we've got a long way to go before we could actually look to take advantage of any directional bias here on daily. However, if daily does roll over and break below the support level, then we'd look to be able to trade that on the lower time frames, as you know. Okay, so not too much happening there. The Kiwi is showing more bearish tendencies than the Aussie. So much as they are often correlated, we can see that this is a more bearish picture, if you like. So having said that, last week's bullish candle was an inside one, so not much action there at all, and also reflected by this breakdown in bearish cyclicity. So a much stronger bearish breakout beforehand, and then in the preceding week, we had that retracement wave, but last week it failed to break through the support level. It did test it, but once again, no establishment of bearish cyclicity at all. This is more bullish, showing more bullish tendencies with a bullish impulse wave here. Still some way to go, however, as we've still got this resistance level in play. But once again, we've got nothing to trade here. Our overlays are pretty much done. If you are trading an overlay, perhaps you'd still be in. No, actually, your overlay would have closed out. In fact, yesterday you would have taken your profit on the bullish overlay there, but otherwise nothing doing. And folks, by the way, I am still trying to stay away from discussing strategy because obviously we're trying to be strategy neutral here in the challenge. As you know, outside of the challenge, we go into a lot more detail on the strategies as well. Okay, moving now into our yen crosses, another very strong picture on the weekly time frame. Last week's bullish impulse candle isolating that preceding low, very strong bullish picture. End of that retracement wave, confirmation the end of it, and we assume therefore that we're back into the next impulse wave. Remember, this is not a confirmed impulse wave yet. We need to have a higher close. But given the definition of a trend from a cyclicity point of view, which is an intact sequence of phase 1, phase 2 waves or impulse and corrective waves, we are thereby able to assume that if a corrective wave is over, that we are into the next impulse wave, even if it's not yet a confirmed impulse wave. So using that logic, conditions are now appropriate for impulse strategies with execution taking place on the daily time frame. We had a slight retracement, obviously, with Friday's non-farm. You could see we had a small bearish candle there. That high was isolated yesterday. There is definitely potential at the moment, although it's still early in the day, for this to close as a bullish impulse candle. And once again, I'm not going to delve too much into the strategies, but you guys who know this impulse strategies know what to do with that. And likewise, if we do get that, then you also know that the conditions would be potentially appropriate, especially if we get a bullish breakout, by the way. We do need to have reason to believe that we are in a trend on daily in order to be able to take advantage of the lower time frame core strategies. Right, so Gbp Yen, you can see this trader, and by the way, these are funded accounts. So this trader is in a bullish trade here already. and quite right too on GBP Yen. It's been some time. So this is what advanced targeting looks like. You'll notice that the entry was all the way back here somewhere. So I think this is in fact, this potentially, this would be a daily impulse. So I can't avoid that. But yeah, we are looking at advanced targeting on this one. We've gone well past the standard target, but you can see that with the this may well roll over. And let's have a look at the daily time frame, in fact. And for those of you who understand the advanced targeting, you can see why this trader has done the right thing here. Right, so actually there you can see where the entry candle was all the way back there for the daily impulse. Right, looking like a very, very nice trade here. That being said, we did have a bullish breakout of this preceding range, certainly on the 4-wave channel. It took an extra day, I think, on the 3-wave channel, but we are outside of the channel. I agree that these are not very strong bullish candles, but we have had a breakout. That does mean potential trend, and you should know what to do with that as well. Right, next up, Swiss Yen on weekly, nothing doing here. Both of the overlays having hit take profit. Those trades are finished. Nothing more for us there. So a very narrow range forming over here. Our HTC channel yet to catch up with that. But we can see how this resistance turn support is being nicely respected. And likewise, it's not even going anywhere near the resistance up here. So that's all well and good at the moment. I'd say this is the least notable of the yen crosses. And you can see here on daily as well, deep inside of that channel, even though we've got some bullish cyclicity forming here inside of that channel, it's overall a sideways market, even though it's quite a wide range. So nothing else for us to do here. Those of you who have been trading overlays, that trade is over as well. Okay, so the Cad Yen, another strong picture. The same kind of pictures we saw on Euro Yen. That's almost exactly the same commentary, in fact. So you should know what to do with that. From a strategy point of view, we do have this pullback over the last few days. That bullish weekly impulse candle gave us a breakout on this day over here, going back to what, last week, Wednesday, whatever it was, so 31st. But we did see the market come back down and close just back inside of the channel again. So unfortunately showing a little bit of weakness here, but a very flat sideways market, probably reflecting the holidays. But it's still overall a bullish market, even if we're seeing weakness there. Aussie Yen, similar kind of picture, but we didn't have even though this low was isolated at the close of last week, this is not a bullish impulse candle. Nevertheless, these conditions are appropriate for us to trade impulse type strategies on the execution time frame. Still quite a strong picture, maybe not as strong as the others, but still quite a strong picture. Here on the daily, very much inside of our range. Overlay, probably still got an overlay running here, or maybe that's taken already, but in any case, we're still seeing a flat market in the last couple of days. I don't expect that to remain the case, as I say, certainly once this holiday period, this holiday week is over. Let's wait and see. We don't know what's going to happen, but nothing doing here for us though when it comes to any of our core strategies, certainly. And the last of the yen crosses, once again, similar picture. The Kiwi pairs showing a little bit more volatility, as mentioned before. Last week's candle being a bullish inside bar, still a strong picture with this support level having been nicely respected. So looking at that on the daily time frame, almost an identical picture with a slightly wider range having been caused by that bearish impulse candle on the Kiwi. But nevertheless, nothing really for us to look at over here. No WM patterns either. Okay, so Euro crosses. This one obviously been going for some substantial amount of time. Here we have this long extended bearish move on Euro GBP. So last week's candle did isolate a high from the preceding week. And certainly that means that this trade that we've got on here, well, this trader has got on here, still intact using advanced targeting. So dropping down to daily, you can see that it's almost over, may well get stopped out. I think this trade has in fact been going for well over a month now. So interesting to see how the advanced targeting has worked out on this one. So yeah, you can see that we are very close to having the profit being taken on this one. So from a technical point of view, though, last week we did get a bearish resumption because we did get this breakout after a test candle on the day before. So we are outside of the channel on this. Relatively small candles. The daily range is dropping at the moment. But let me just expand that a little bit more. If we take that other influence out of the bigger picture, you can see that this is still below the support level. So it's now resistance. And we, again, are seeing a relatively sluggish market in the first couple of days of this week. Let's wait and see what happens. Right, so again, my least favorite currency pair, Euro Swiss on weekly. So technically, this is still a bullish trend. Not only that, last week's candle having isolated the preceding low and the inside bar confirmed the end of that retracement wave. So we're assuming an impulse wave here. Euro Swiss, however, a lot of the time, of course, is highly correlated pair. So the euro, the Swiss franc, being very correlated. So a lot of the time we have this relatively choppy behavior with lots of false breakouts. So as we've mentioned before, we had that bearish flag pattern, very weak bearish cyclicity, which came to an end, I think, 2 weeks ago, and starting to establish a very weak bullish cyclicity here. Very weak, because even that was a bearish impulse wave. But nothing doing, absolutely nothing doing for us here, completely inside of the channels, and any overlays are long done and dusted. Euro Cad, similar picture to some of the others that we've seen over here, still very much a bearish trend, and ignoring this week's candle. Last week's candle isolated that preceding high, also a bearish impulse candle giving us an impulse wave. So that is definitely a bearish, this is a bearish impulse wave. But when we look at the daily time frame, we've had that retracement coming back into, well, looking forward to not last week's non-farm payroll. And then yesterday testing that preceding resistance level once again, and then pulling back and closing outside of it. So we've had multiple tests of this resistance level. Again, very sluggish market behavior. Today's candle, we don't know where that's going to close, but if it does close inside of the channel, that's showing a significant sign of weakness, particularly if it closes inside the preceding corrective waves price territory. So this is still a relatively strong picture at this point in time, but it is very much a corrective wave, and we haven't had any indication that this corrective wave is over. So if you are a continuation trader, then you'd probably still be looking to place your orders. But remember, if this does close inside of that channel and that preceding wave, it's a sign of weakness. Right, Euro Aussie, much weaker picture here on the weekly time frame. Just we've spoken about this for the last few weeks. We did see a breakdown in the bearish cyclicity, so there's absolutely no trend here. We had that single candle wave, which is a phase 2 corrective wave. Phase 2, phase 2. This wave is not yet over, but as you can see, there's no directional bias showing itself here at all. And that's also very much visible on the daily time frame. We did have a nice overlay last week, but that's pretty much it. And remember, today is still relatively early in the day, but we can't see any directional bias here at all. So nothing doing there. And the last of the euro crosses, likewise on euro New Zealand dollar, we had that breakdown and bearish cyclicity, phase two, followed by a phase one with the preceding week's close above the previous wave's high. So nothing doing here either. Regardless of where you're drawing in your channel market, an LPO range would be here. So still very much inside of that, nothing doing. Okay, and here what it looks like on daily. Likewise, it's very choppy at the moment. Nothing for us to look at right now at all. We did have an overlay that hit its take profits yesterday. All right, so Gbp Swiss. We obviously, this is the daily time frame, so let me just go quickly to weekly first. That very strong picture still showing itself here as well. Very bullish, very much a bullish trend still at this stage of the game, and also a confirmed impulse wave of that trend. So we have been looking obviously to trade this on the lower time frame. You can see that this trade has had their trade on for quite a long time, going all the way back to into February. All right, so this has been going on for well over a month. But you can see we're almost at the point where it looks like this trade may well be taken out on its trailing stop. Nevertheless, been some really nice trading for the advanced targeting for a while, but the party has been coming gradually to an end across all of the trending pairs. So nevertheless, here on daily, we are also still outside of that channel. It's just bouncing along the top of this support level, which is being shown both by our 3 and 4 wave channel. And yeah, we need to wait and see, basically. However, even though we had a bullish breakout, there's no, and it hasn't taken advantage of that. There hasn't been any long extended bullish move there. The bears aren't doing anything either. So again, very sluggish over the last few days, and nothing really doing there at the moment. So Gbp Cad, we've seen that weekly previous breakout fail completely, followed by a bearish impulse wave back inside of the channel. There's absolutely no open interest for us here at all, and not even an overlay. So dropping down to daily, you can see this very weak market pattern over here. So absolutely no strength showing itself. That bearish trend, as we know, came to a distinct end with a breakdown in sequentiality of cyclicity. Remember, here we had a bearish phase 1 impulse wave, phase 2, phase 2. So that being a phase 2 because it failed to close above the preceding wave high. So a very dead market indeed, although there was an overlay. Okay, so Gbp Aussie, wide range here on the weekly time frame. Even though last week's candle was did confirm this as a bullish impulse wave, that is nevertheless still, we're not interested in this all. There isn't even a valid W pattern here. So that being said, on the weekly, that bullish impulse wave looks like this on daily, where last week we did get that breakout. That's not a very strong candle, it has to be said. But having said that, this support level has been consistently respected since then over the last several days. So outside of this, and if given the fact that yesterday's candle was an inside bar, means that low is isolated, we would treat this as valid conditions for anything that's looking to capture the price movement in a following impulse wave. So it doesn't mean that we will get that impulse wave. We're not predictive traders, but these are valid conditions certainly on the lower time frame. So if you are trading lower time strategies such as the H4 impulse, you'd be in a trade on this already. Okay, so moving on. The last of our pound crosses here on weekly. We were discussing yesterday how last week's candle tested that preceding resistance level and fell back during the course of the week. Although technically that wave isn't over because that high hasn't been isolated. And by the way, it looks like this week we're going to have a retest If you drop down to the daily time frame, you'll see that we did in fact have a breakdown in the sequentiality of the cyclicity. So if the trend is over, the wave is over if you're using multi-time frame technical analysis. And this is a perfect example of that. So even though we are not able to say that this wave is over until that high is isolated using single time frame analysis, when you combine it with dual time frame analysis, we are. The wave is the trend is the wave. So let's wait and see what happens here. Doesn't mean we won't have a resumption. Of course, that is possible, but right now there's nothing doing for us on this currency pair. Right, moving on to the other pairs. A long extended bullish move here on weekly time frame again. So this is a trade that also that you should have been able to get into recently. It's not looking great at the moment, but that doesn't matter. We certainly know with our core strategies how to deal with that. But yeah, we're still seeing that very sluggish movement. And well, this wasn't apparent yesterday, but we've had a close inside the previous phase two's price territory. So we did get that breakout last week. It was a nice breakout. But certainly as of yesterday, there's significant signs of weakness creeping in here. But let's wait and see what happens with that one. Nothing doing for any of the strategies, however, at the moment, except for trade management. Aussie Swiss, here we had, and we've discussed this before, a breakdown in the sequentiality of cyclicity. I haven't really done much updating on this one because this is probably the flattest of all the instruments that we're looking at. This is being the weekly time frame. On the daily, well, quite frankly, I don't even generally bother doing anything over there. So there's no overlay here either. We were discussing it yesterday because with an overlay, we need to have either our potential X or potential B or even C bouncing off of a channel boundary. And as you can see, we are well within side of that channel, far away from the channel boundaries. Okay, Aussie Cad. Well, false breakout on weekly. We've discussed that before, still very much inside of that channel. It is a bearish impulse wave, however, and that's visible here on the daily time frame, where we saw that bearish breakout. It has been tradable on the lower time frames recently, of course, as well. But last week, we saw a very similar picture here as what we've seen on a few of the Aussie pairs and Kiwi pairs, where we had that breakdown and bearish cyclicity. Very significant breakdown with the candle on Friday isolating that low and giving us a corrective followed by corrective. So again, folks, this is not a phase one impulse wave. That's a significant sign of weakness. Impulse waves are strong waves. They break through support if they're bearish. This one failed to break it because it could not sustain itself. Price could not sustain itself below that preceding low. So that one's over. Overlay, yes, absolutely. However, I think that take profit was actually hit yesterday. Right, Aussie Kiwi on weekly. False, well, it's not yet a false breakout, but we did have that candle closing outside of our four-wave channel, but last week's candle coming all the way back down inside of the channel. Now, it hasn't isolated the high because it made a slightly higher high, but again, using multi-time frame analysis, well, actually, in fact, as far as this is concerned, that is still an intact trend. We have not yet had a breakdown in the sequentiality of cyclicity. We are seeing weakness with Friday's close back inside of the channel and the preceding corrective waves price territory. Today is looking a little bit more interesting, but until the day is over, we can't say anything. All right, so may well see this coming back outside of that channel. And if it does close outside of our channel, well, you folks who are trading the impulse strategies should know what to do with that. Right, so the last two currency pairs that we've got, Kiwi Swiss, and again, a nice strong picture on the weekly time frame. Last week's candle being a bullish inside bar. Again, we treat inside bars as appropriate conditions, regardless of what strategy you're trading. So that was quite significant for folks who want to trade lower time, well, certainly daily impulse and so on. So, however, nothing's happened here. We have not yet had a valid setup for that. And that this at the moment, remember, it's still early in the week, will just be that initial pullback that we're looking for. So keep an eye on that one, definitely. However, on daily, we had a false, well, it's not a false breakout yet, but certainly the this retracement wave came straight back inside of our channel. If you are a WM trader, you will, I'm sure, have noticed that yesterday and the day before's candle, or Friday's candle, respected this preceding resistance level. So we are seeing a potential outside C close here. All right. So the lowest, I beg your pardon, the highest close that we've had here was either of those two. So very much an outside C close. So that is an interesting picture for trading on the lower time frames. You want to drop down to H4 and below. But certainly, on weekly, it's still very much a bullish picture. Okay. Kiwi Cad, and similar as to what we've seen before, this long extended bearish impulse wave, technically, as of Friday, was not yet over with an inside bar. We don't know what's going to happen this week. If this rolls over and comes back down, we'll have a non-relevant isolated high. However, if we do get a higher close at the end of this week, that means that this low will be ringed and we will have an incomplete bullish wave. So that being said, on weekly, we are inside of that channel. So, and there's no valid WM pattern there either. That end of that bearish wave is distinctly visible here on the daily time frame. With a corrective or phase two breakdown and sequentiality of cyclicity. Bearish trend is absolutely over. Having said that, the bulls haven't run away with it. Again, I don't want to jump ahead and say what's going to happen today because we don't know. But certainly yesterday tested the preceding resistance level. We might well just be going either into a relatively narrow range here, or we might be seeing the beginnings of a bearish trend continuation. And that's it for the currency pairs. So remember, I'm sticking largely to currency pairs at the moment. There are other instruments that you can trade if you are in the challenge. I'm not stopping you from trading any instrument at all. But certainly for those of you who are also trading with funded accounts, which is part of what we are looking at here, your evaluation account is only on the 28 currency pairs. Right, so as always, if you've got any questions or queries on the analysis, please do drop it into the comments below. If you're watching this on our YouTube channel, please do make sure to subscribe so that you are going to be getting all of our training and market reviews as they come out. Please do also hit that notifications bell so that you do get notified as soon as we do publish any new training. And if you're not already a member on our Facebook group, then please make sure to go and jump into that. We've also got excellent free training on one of our core strategies. We'll make sure to post the link for that below. If you haven't yet done the 3-video training series on the daily impulse, then I really recommend that you do that. That is a professional strategy and has been used very effectively even in fund management for quite some time now. So do yourself a favor and get into that training. Right, folks, so hope you have a great trading week further. Remember, for the challenge participants, just keep your head, make sure that you are rigorously consistent in your approach to the market. Always take that next trade, but only if it's valid. Have a super week. I'll chat to you soon. Bye for now.